everyone, me Kevin here. Let's talk about rotations in the stock market and potentially the next rotation. Right now I'm going to take a look at something that's been rolling over as of the past few weeks and something really to be paying attention to. But first I want to give you a quick little preface in terms of how we know that things go in a rotation, just basically by looking at the past 3, 4 to 6 months to see what has been happening, to see the insane cycles. Okay, so here we go. We know that we've had crazy cycles since about the election, which is also approximately when vaccines were approved. We started a massive recovery trend. Recovery stocks skyrocketed. We started the year with tech and SPACs and crypto at all-time highs. At the same time, we had recovery stocks at all-time highs. Everything was going great. Along with this, we had a big momentum movement in GameStop and AMC right at the beginning of the year, right around my birthday, actually, January 28th. And in early February, all of a sudden, we started having a little bit of a rollover. We started seeing healthcare start rolling over. We then saw tech roll over, and all of a sudden, there was a lot of short selling happening again, almost like the shorts had to make up all the money they were losing on GameStop. And then the SPACs rolled over, which were basically a no-lose option in 2020. Then the momentum stocks started rolling over in March, and crypto peaked in April, and then we revisited lows in tech in late April, and others that were selling off or had sold off even more. During this sort of cycle, we had recovery stocks hit their peaks and kind of float and hold out near those strong post-COVID peaks. But now we've had a lot of talk about a re-rotation. We've gone through some craziness. We've seen stocks float up again from some of their lows over the last few months. And we've got a new chart here from Bloomberg that's pretty empowering. It really kind of shows us where trends were in terms of search trends, and it gives us an idea of where things are now and potentially where we might want to look for the next rotation. So take a peek at this particular chart here. This chart here shows that when the pandemic started around March 2020, we saw massive search results for home improvement, computing, self-employment, telecommuting, furniture, exercise equipment, food delivery. These are things that just went absolutely nuts during the pandemic. We know this. While at the same time, we saw vacations, restaurants, movie theaters, commuting, job interviews, hotel, car rentals, apartments, and flying all plummet. And now these things started doing better in the summer. Then we started getting some concerns about like maybe a second wave, and the winter came, and so we had these search results plummet again. And then we had our second stimulus and our third stimulus, which really led to this explosion again in restaurant searches, vacations, movie theaters, commuting, all that, right? But take a look what's recently been happening. We've actually seen a decline in almost everything. Like, it's literally the everything decline right after the stimulus money came in. Stimulus money came in, we even had more searches for things like furniture, exercise equipment, telecommuting, home improvements. We had more searches for that, right? But look at it, literally everything plummeting. And this is as of June going into, I think they're reporting out July. That July obviously hasn't happened yet, would be somewhere around here. So this would really be a transition from the beginning of May to June, which is where we are now. And I really like this sort of visual representation they did here, because really what they're doing is they're taking Google search trends and they're interlacing them, along with probably some other software to help, collate these search trends. But I have to say, this is really, really interesting because it's sending us a few signals. The first signal that it sends us is, and I know some people, they don't like hearing this, because, we hear the Fed and we're like, those are just the money printers. They're going to ruin our money and all this, right? I get that. But one of the things the Fed said is when the economy begins to reopen, we could literally see a big old fat surge of spending and a surge of inflation because of that. But that'll be temporary and that'll subside, just like supply chain issues and base effects will subside. Folks, if you look at the search trends right now, look at this. Stimulus, boom, and now subsiding. So far, And we want to keep an eye on this, and this is something we talk about on the channel, is you want to keep an eye on inflection points. I like to be the first channel on YouTube to tell you about inflection points. Whether it's good news or bad news, I will report it to you. This is why hopefully you subscribe to these videos or you join me in the live streams, private live streams we do. No intentions of stopping my live streams, but you get lifetime access to all the content. Link down below, 40% off. We talk about a lot of trends before they happen, because it's almost where we get to brainstorm and talk about ideas and ask questions directly to each other. And now I corroborated a lot of this with Google search trends, and I also went onto website comparisons, and I noticed that so far at least, I still have solid website activity for websites like Travelocity, Southwest.com, Delta.com. I'm still seeing straight up and to the right growth at these companies. So I'm not sure if like the leading search trends are slowing down and then we're going to see website traffic decline. That could be the case. I do know that when I looked up Peloton, which is obviously a company that I invest in, I did notice that we didn't get a spike in January like you would have expected, followed by a fall. We actually had a rise in Peloton's website analytics all the way through March. And it was only after March that we started seeing a slowdown in the website analytics for Peloton, which is really incredible. And keep in mind, the number getting smaller is actually a better thing when you're talking page rank. But anyway, you really got the slowdown here in the second quarter, whereas first quarter was still a big growth level here. But really, you're not falling, which is incredible. You're holding at these higher levels here. So definitely a little bit interesting to see these differences, because it's possible, and this is where it's a little up in the air, it's possible that search trends could come before a decline in actual website activity. For example, you book a ticket because you're searching for flights, that activity might slow down 2 to 4 weeks before actual like website data slows down, because people who've already bought tickets are still going to that website or checking their tickets or making revisions or getting their stuff. Who knows, right? But this slowdown is very, very clear. This slowdown is no good, so to speak. But while it's no good for recovery in terms of travel and spending and this surge of spending, what is it potentially good for? Well, inflation. It actually reiterates the belief that, wait a minute, if all of a sudden we have this surge of inflationary style consumer spending, but now people are kind of going back to, all right, I did my spending, I've been back out, I went on a vacation, wow, Disney was more crowded than I thought, oh wow, the restaurants were more crowded than I thought. You know, now all of a sudden people are done spending again, either because the stimulus is worn off or it's like, okay, fine, we're back to normal. This is something to keep an eye of, because this potentially reiterates what the Federal Reserve says, that maybe inflation is actually not here to stay. Maybe it is actually temporary, which is crazy. But bottom line here, folks, watch the search trends. Right now, the search trends, in terms of which stocks to potentially invest in, right now the search trends, not so hot for hotels, car rentals, apartments, flying. They're rotating down from the peak that we had about 6 weeks ago. The same is actually true for food delivery, exercise equipment. Those search trends are softening. All spending across the board is softening. That doesn't necessarily mean that's bad, you know, sell certain sectors or whatever. I personally think, and y'all already know this, I personally think recovery is probably a little priced to perfection, and that tech has already had a very nice sell-off. But it's definitely an indication that maybe inflation won't come in as hot as expected. Something to keep an eye on. Thank you so much for watching. If you found this helpful, subscribe to the video. Always helps me out to know which videos you like. Make sure to share if you also found it helpful. And hey, thank you so much for watching. Check out the coupon code down below, and we'll see you in the next one. Bye.